Glad to be back. Happy to be back. Uh, a little bout of COVID, little vacation. All good. Yeah. Tesla was a short based on you know that's a stock that has run up quite a bit. So whenever, obviously, we don't advocate playing earnings, and I rarely play them in the smaller challenge account. I only play them in the larger account. This was an exception because sort of all the stars were aligning with it. You have a huge run up go, the larger the run up into earnings, the more pressure there is on the earnings, right? So the bar keeps going up. So it has to not just meet expectations, but blow them away. On top of that, you had a short squeeze. And what happens is at the end of a short squeeze, by definition, you've kind of exhausted out all of your shorts. So you've now taken out a potential squeeze, right? So sometimes you get decent earnings, and what happens is the shorts bail and the stocks go up because you get that squeeze. That was no longer an option for Tesla either. So, you had heightened expectation and you took away the potential for another short squeeze. Those two combined, I felt, gave me an edge enough. On earnings, you're looking obviously for more than a 50-50 coin flip. And on that Tesla play, I felt it certainly was. I'm still short 1,500 shares on Tesla at 247, and I'm holding that short for the moment. And I'm also short Boeing, which, God help me, that stock is just, I mean, I've never seen a stock that is more volatile, less beholden to technicals. I probably should not have shorted it. It had a perfect short setup, and then what did it do the next day? Of course, it goes up $7. And now today it's down, but down commensurate with the market. So I need to see it break through those SMAs before Friday. And then I stole Pete's pick. I also short Qualcomm. And let's take a look here. You can see on the screen. We're going to go to Qualcomm here. And so first you see these new trade signals here. I don't know if you can see them on the screen, but these are the new trade signals that Pete has built into Option Stalker. And so you see here, we are on a sell signal for Qualcomm on the M5. But let's take a look at the daily chart, okay? So put the daily chart here, and let's put the 50, let's put the 100, and let's put the 200 SMAs up. Okay. So here you see a break, a clean break right through this 100 SMA right here. And we're still at the low of the day. Plus, you have all of this space here. You have all of this right there that gives us a huge amount of room to grow. It is broken through several gaps down. You had some negative news today. You also got another gap down here. Does it attempt to fill the gap? Nope. It just consolidates on a kind of a bear flag, tries to test that SMA, bounces off of it, but the weakness of the market today just brings it down. We got to keep in mind that there's earnings next week, so that's why I put the puts expiring on Friday. And I think here you have a lot of room to go down, probably to around 175, 176, which is where your 175.25, which is where the next kind of gap down is for this. So here I am with Qualcomm short. I do have, I had a Tesla long. I bought back the short calls. They weren't really worth much. So I'm kind of just holding that. Tesla as it, if anything could bounce, Tesla can. And PTLR is getting pummeled today. So that's another long that I'll probably have to close early for a loss. That's where I am.
I do have a long on. I like LMT. Not that we want to be taking a lot of long positions, but this is a stock that gapped up yesterday. It had a compression breakout on a D1 basis.
Earnings.
Rallied the entire day. Yeah, it had earnings yesterday. And yesterday before the open. I love that compression breakout. I love that the stock closed on the high of the day, defied gravity, moved against the market. And today it barely even flinched with the market pulling back. And now you can see how it is grinding higher. So I think I'm long at 504.50 this morning. Another stock I kind of like long side, although we're not trading the long side. I've got a couple of selective longs in here. NVAX is another stock that I'm watching that has actually decent price action yesterday. It's holding up well today. There's horizontal resistance right around that 1630 level or so. If it can break through that, I think it's got a pretty decent path to 24. But right now, the short side is where you want to be focused. We've been waiting for a market pullback. We're getting the market pullback. We could see that the earnings reactions to Google and Tesla yesterday were negative. So perfection is priced in. Any little weakness that we see in the numbers. So overall number could be good, but it seems like the focus could even be on just one little segment or business division that spoils everything. And with regards to Tesla, you've got a ton of potential and lots of promise in robo-taxi and Optimus and all the other things that Tesla is working on. But the focus is the current quarter was not good and revenues are down. So investors are not as willing to give companies with huge growth prospects a free pass right now. And that's because valuations are stretched and we're starting to get into a seasonally weak period.
As I saw one person comment, it was kind of funny, which is, for whatever reason, as much as Elon Musk wants people to forget that Tesla is a car company, it right now, maybe in the future it won't be, but right now it's still a car company. And so, investors who are looking at everything down the road, okay, yeah, there's a lot of things that down the road look like it could be huge revenue generators. But in terms of the actual product, in terms of what's selling, the sales are down, and they're down more than competitive EV makers. So, that is kind of really giving investors some pause, where they're at some point going to have to start seeing the proof or the revenue for a lot of these non-car products like Optimus and so on, in order to kind of buy into the hype. So it has hard support at 205. I'll probably close my short right around there.
And, as far as the overall market, like volume rally, very much program driven. We know that from the price action intraday. And one of the things I'd like to stress is the importance of having asset managers involved in what's happening in the market. When you get a market decline like we're seeing today, that is big money. They are shifting and reallocating their assets based on the earnings news. Some could be lightening their risk exposure. That's why the volume's heavy and the pullback is very steady. That's different than the price action that we've seen the last, gosh, all you have to do is look at the last week. Bring up a 5-minute chart and you're going to see relatively narrow intraday ranges. You're going to see just random long green candles that look fantastic. Oh my gosh, the market's breaking out to a new high of the day. And then you see red candles soon after, reversing all of that move. That is bullshit program trading nonsense. Very, very difficult market conditions to make any money in. And that's why we've been largely on the sidelines waiting. Now that we've got institutions involved and they're moving money around, now we have something that we can actually sink our teeth into. These moves are legitimate. These moves are sustained. Our probability of successfully trading is much higher. And that's what we have to wait for. And the same is going to be true for swing trading. And so don't get overly excited by the move that you see today. Yes, this is a nice little technical breakdown. Is the market going to roll over and play dead? We have the FOMC statement next week. Okay, that's going to be major, major news. We have earnings coming out from mega cap tech companies yet. So we've only heard from 2 of them. We got Amazon and Apple and Microsoft. All these companies have yet to announce. And so let's see how those earnings reactions come out as well. Yes, there's a kink in the armor right now, but this is not, it's premature. This is not where you go in and start loading up on all sorts of bearish trades and
No, yeah,
buying puts.
you're seeing you're seeing right now a de-risking. So you got investors who are kind of concerned that Google, Tesla did not blow away their earnings, particularly Google. And so it kind of puts a focus on the other, the Amazons and the Meta and all of that, you know, these stocks have had such an incredible run up over the last few months that even it's weird because they say, here's the expectations. But if that's not, if it hits expectations and it goes, that really was never the expectation, was it? They really need to redefine what they mean by expectation, because if it means that this has to blow away earnings in order to go up, then that should be the new expectation, you would think. It's kind of like the temperature, real feel. Well, if it feels like it's 100 degrees, well, then it's 100 degrees. So here, someone asked, what are your favorite search parameters to put into a scanner? So here on Option Stalker, here's a custom search, right? So you have a large number of preset searches here, right? So you have red royal flush. So let's say right now we want to see what's bearish, right? Obviously the market's bearish. We want to do some bearish searches, and we want to see what proportion. Everything is obviously down. Throw a dart and you'll hit a red stop. But what is proportionally down to compared to the market? So here you have red royal flush. These here, Qualcomm, right there on the top. You have a lot of great stocks that have been not only weak today, but are consistently weak over the past few days. Relative weakness 30 is another great preset one here. This is going to tell you what is currently relatively weak. So you can see, even though spot is up for the day, in the past 30 minutes, this stock has been relatively weak to the market. So you have all these preset scans here. However, if you wanted to get into a custom search, right? So let's say I said, okay, I want to see a stock that is relatively weak to the market on an M5 basis and on a D1 basis. I want there to be a sell signal on the 10p2 signal here. I want the price of the stock to be at least, let's call it $20. I want there to be some decent option liquidity here. So I'll put this at -2. What else do you like here, Pete?
Let's see. Well, below prior day's low is always a good one.
Okay, so below the prior day's low. There we go. Let's just see what that turns up. Here we have right off the bat. Here's a list of stocks, right? Now we can narrow it down. So you want to make sure there's no earnings within the next 5 days, let's say, right? And maybe we want it to be below all 3 SMAs. There we go. Now you have a group of 7 stocks. So let's just take snow. Click on snow, move this down here. Here is snow. So look here at snow here on the daily chart. And you can see snow has earnings coming up next week. But look at this price action here. This thing has not, you have the sell signal right here. This thing has not even come close to trying to test the 50 SMA. Right here is where it tried to test it, gets rejected. That was enough for people to see. Down it goes. You have a lot of room down here. So there, now you found yourself a potentially good day trading short. Just that simple using this. Now, let's say you wanted to see, is there anything remotely bullish? Well, just reverse it and see if there's anything out there. There we go. These are your...
Easy way to do that is down at the bottom of the screen, you'll see flip side. It's at the very bottom of that. Then all you'd ever have to do is click that.
Oh yeah, look at that. See? Perfect.
And
Easy.
it'll reverse everything.
So here now we have a list of, I wouldn't recommend being bullish today, but here we have a list of some stocks that might be bullish. So let's take a look at ABBV here, which is it's not quite like Boeing to me, but I can't stand this fucking stock. But here we have ABBV, right? So on this stock here, you have earnings tomorrow, so you probably want to stay away from this one. And let's check out LMT. We were talking about that earlier, right? You were just talking. So there's LMT. You had your earnings announcement here. There's your reaction. Now you have another gap up here. This is well above all of its SMAs. It's holding its gap up. Would I probably wait for a little bit of a retracement? Make sure this gap right here holds? Yeah, probably. But if you're looking and if your heart's set on going long, that might be one to keep an eye on.
Yeah, nice long-term breakout. Love that compression. Love the strength right now. But yeah, if the market starts to pull back, all stocks are going to pull back with the market. So let's say that what we're seeing right now is the beginning of a market decline for August and into September. Well, then LMT is a stock that you want to set some alerts on, keep it on your radar. You don't need to be aggressively long the stock. This is more of a day trade for me because I'm looking for that momentum to just continue for a day or two. I'm looking for a move maybe to 515 or so. I'll be taking my gains there and exiting the trade. So, we had talked about the market overall and being sidelined and just going into day trading mode, keeping it small, being very patient. So what happens when I get into that mode is I start getting a little bit anxious because trying to be patient, I'm waiting for the market to set up, and the market keeps floating higher. And that's very frustrating for most traders. They finally throw in the towel and they go, oh, screw it. I'm going to buy. I'm going to do some swing trades. This thing looks like it's going to continue to go higher. And so then they start loading up on some bullish swing trades. And when the rug gets pulled out, it gets pulled out really hard and really fast. And so now all of a sudden, instead of having really a clean slate to work with, where you're objectively monitoring price action and making decisions, you've got this dark cloud over you because you are in crisis management mode. You're trying to mitigate your losses and you're trying to manage these swing positions. So the other thing that happens is that by not doing any trades, when the opportunities do set up, you're really anxious, and you can see the quality of these moves. You can see the sustained movement on heavy volume. You can see the technical breakdowns. You did not have that the last 3 weeks. And so now you're ready to take action, and you're ready to step up to the plate with some pretty decent size. If we get a lower high double top in the next couple of weeks and the market really rolls over and we couldn't even challenge that all-time high, earnings season is behind us, FOMC behind us, seasonal weakness coming up. And now when you start seeing that market roll over and drift lower, yes, absolutely, then we can start taking some bearish swing trades.
Okay. I'm sorry, I'm just accumulating for a separate purpose. Continue to accumulate Amazon shares. Accumulation of Amazon.
You and I just keep getting lucky here, Harry. You know, technical analysis doesn't work. So for the last 20 years, I've been lucky, and you've been lucky on all of your trades as well. I posted 2 weeks ago. I posted in RDT, in real day trading. We're going to be coming up on a buying climax.
Yep.
Be very careful. You know, and what do I read? I read comments like, Tom Lee says that the S&P is going to 15,000. I just bought QQQ 5 times leveraged ETF. Really? Okay. You go do what you think is right. You're going to be hemorrhaging, and you are not going to have the staying power to hang with that position.
No, I mean, look, buying at there are many trading maxims just aren't true, right? You know, the whole certain time buy the dip, this, you never go broke taking profits. Of course you do. In fact, that's where most people go broke, because they don't take enough profits. But certain ones do hold. And buying, when you have the market, right? Now, look, stocks at an all-time high are one of my favorite places to buy them. So because there's no baggage, no bag holders above it, it just, if it's at an all-time high, it just broke through some resistance. You have anyone in that stock is pretty much at a in profit. So, you know, the only reason to sell at that point is profit taking, but there is no people who are holding the bag on that stock and then looking to sell and then get out. So I do like buying at an all-time high. However, when you have the market sitting around an all-time high with low volume for an extended period of time, and it's been a while since you've had any type of major breakthrough, so it's just kind of hovering there, and you get these low volume days, and you've had you know, a huge amount of distance of time before there's been since there's been the last 2% pullback in the market. That is a time to start exercising caution, right? And, you know, Pete, when you started to say that you know, we're going to get this pullback, you know, the beauty of day trading is obviously on any given day you can go in, you can go out, and then done. But when you start talking about swing trades and you're looking to hold the stock for more than a day or two, then you not need to start being concerned, particularly with your position size. I'm not saying, you know, when your market's at all-time high, you don't go long. Of course, you're going to go long. You're going to ride some of those longs. But at a certain point, you want to start tapering off your position size on those, because you'll get caught. And when you do, your position size really is going to dictate your patience on those trades.
Taking a look at some questions.
Weak.
I saw on your custom search, AMD reports earnings next week. So I'm only talking about day trading. I'm still only talking about day trading right now. I want to see.
Here's my concern on AMD. Let me show everyone this. I'm going to go to the D1, and I'm going to I'm going to back it out a bit to, let's see, I'm going to go to around January 3rd, probably right around here, right? Yeah. So let's see if I can get a line here on January 3rd. Right to here, right to here. There. You see that? Bam. Where is AMD bouncing off of right now? That line. Now, you know, it takes a while to learn how to draw these trend lines. But I mean, I just see that trend line as I'm looking at it. But that there is not a strong trend line, because when you have trend, you know, that trend line can also be done this way, right? You can also go up here and make the case that that has been broken through. But you do have some support. So if I was a short AMD on a day trade, and as Pete said, it has earnings next week, I'd like to see this broken. And how do you do that? Well, I mean, you just set an alert. That's all. You just create a good to cancel trend line alert right there. Done. Breaks it. I'll get an alert. Then I know, okay, AMD, good short.
So another short, another theme. Sometimes there are themes that you can lean into. Right now, technology, obviously, after a big run up, those are the stocks that are going to be the most vulnerable to a pullback. But you're also starting to hear ramblings from McDonald's and companies that have a lot of consumer discretionary spending. Restaurant stocks and such are weak. Apparel makers are relatively weak. So today on one of the searches that came up, LW, Lamb Wesson Holdings. Blam! What a huge gap down. Well, you should ask, well, what business are these guys in? What the heck do they do? And why is the stock down so much? They make French fries. Earnings pre-market, they make French fries. Well, who buys French fries? And restaurants buy French fries. Do you think that this might have an impact on a company like Chipotle, who's announcing earnings after the close today, or McDonald's, or some of the other restaurant companies? Might this have broader implications on other consumer stocks? Yeah, it absolutely would. And we've been looking at the likes of Starbucks and some of the other food companies, EAT, Shaq, SHAK. So those are all going to be relatively weak because we're starting to see earnings from companies within that particular group. So yeah, I would definitely, would I be shorting LW here? It's probably going to continue to go lower for the next couple of days. That is a big breakdown.
I agree with that. By the way, here's a nice little feature that Option Stalker has. It's got a lot of different features, but this one here, you know, a way to play earnings, and I've gone over this before, but just to make sure everyone understands it, is called a time spread, right? And so what you're looking for are two things only, and this is not directionally dependent. You don't care if the stock goes up or down on the earnings. And so the first thing you're looking for is a huge IV difference between this week and next week. And what do I mean by huge? Well, you certainly want more than 50%, right? So if you look at QS, QS has a IV of roughly 190% for this week, and next week it's around 110%. So you're looking around a 0.76, 80% difference. Okay, so that qualifies. What else do you want to look for? You want to make sure that market makers got it right. Now, this is a little opposite of what you normally would do, because whenever you play options, what you're actually hoping for in playing options is that the market makers got it wrong, right? So the market makers are pricing in a move, and then there's your premium, and you're paying for that pricing. So what you're hoping for, obviously, with when you play an option, is that the stock is going to exceed the move that the market makers are pricing in. There's no better example of this than a straddle. A straddle is exactly that. A straddle is saying, okay, the market makers are pricing in a $10 move this week. $5 for the at the money call, $5 for the at the money put, plus or minus $10. However, I'm betting that it's going to exceed that. I'm betting that the stock is going to move more than what the market makers are pricing in. So you do the straddle, it moves more than predicted. Let's say it moves $11, so your calls go up 11. It costs you 10 to do the straddle. You made $1. There you go. However, in time spreads, what you're hoping for is that they got it right. And the reason you're hoping for that is because you want the only thing you're profiting on a time spread is that after the earnings happens, the IV will get crushed, which makes sense, right? You have earnings, all the uncertainty surrounding that stock is kind of washed away. A lot of it is, at least. So the implied volatility is going to drop dramatically. Well, it's going to drop more on the earnings on the that week's options. So right now, for example, with QS, you have 190% IV. So let's say tomorrow that drops down to 30% or 40%. You get 150% drop. That's going to crush the option price of that stock, and it's going to drop next week's. But now, because next week already started out lower, proportionally, next week's is also going to drop, but not as much. That delta, that difference in the drop is where you make your profit, because what you're doing is you'll be selling the at the money calls for this week, and you'll be buying the at the money calls for next week. So if you did that, for example, for QS, and you did the 7.5 at the money calls, and you sold them for this week and you bought them for next week, that'll cost you 11 cents. It's an 11-cent debit. And right now, market makers are predicting for QS, and just put up QS here. By the way, I just got an alert for AMD, which did breach its trend line. So what market makers are saying here on QS is that they're predicting a move of 90 cents plus or minus. So as long as QS stays within that predicted range, which is actually around 13%, it's a decent sized move for a $7.75 stock, you're going to make money on this. You can, by tomorrow, that stock, that that time spread, which you spent 11 cents for, could be worth 16 cents or 17 cents. So that's a 50% gain, right? So you get however number of contracts on that, and it qualifies because if you look over here, what percent of the time has QS exceeded the market maker's expectations? Only 7.69% of the time. That means 92% of the time, QS comes within the market maker's expectation for the stock. That tells me that I have a pretty good chance, as long as QS holds the line and doesn't exceed that the market maker's predictions here, I'm going to profit. So I'm going to take that trade. I'm going to sell the 7.5s and buy for this week, and buy the 7.5s for next week. I'll do that for 11 cents, and I will do, let's say, 100 of those. There we go. I just got it. Time spread QS, 11 cents, 100 contracts. Still there, Pete?
Yep, I'm still here. I am looking at some of the questions that we've got coming in. Yeah, it's a nice feature. That is a really good way to play earnings. It's off to Dave Wise. He's the one that really had come up with the strategy. And in Option Stalker, it's really easy to go in and structure these trades and see where your odds line up, which plays are the best. And that pre-earnings options tab is also great because you can go in and see which companies are going to be announcing after the close today and before the open tomorrow. Those stocks, if you have them in your portfolio, you should be exiting them because you don't want to have exposure to a overnight binary event. you also right now, because we're just getting into earnings season, you should be looking for tangent plays. So let's say Delta Airlines is announcing earnings and you're long UAL. Well, you might want to take that position off because those companies are very highly correlated. So energy companies would be similar. Any groups where the companies are extremely similar, you've got to be more concerned about that. If you're long chip stocks and Intel's posting earnings, then you should be aware of that, and you may want to reduce your risk. I did have a question on Nvidia. It's below the 50-day moving average, and it is below horizontal support. What do you think about that for a short? I think it's a decent short. My only concern is that I feel like I can find better shorts. And with the interest that Nvidia has on an institutional level, and that's why the stock has run up so much over the course of the last 2 years, it's going to be hard to shake out those longer term hands because they're always looking to buy. And if I compare Nvidia to, let's say, Lululemon, I got a much better short in Lululemon than I do in Nvidia. And this is always about having a finite amount of capital to work with and finding the best short, finding the fastest horse. That's what it's all about. It's not about Nvidia's run up so much. I just know it's going to be a good short here because it's gone so far, so fast. That's the wrong attitude to have. That is the wrong mentality to have. Along that consumer discretionary spending theme, I see Ulta. That stock is getting pummeled today. And that's another one where, can I put off my hairdo, the spa treatment? Yeah, probably can. Money's a little tight. Well, you see the stock really dropping hard today. That is a big gap down through horizontal support.
Which stock
Just to get away, Ulta, ULTA.
Ulta. Okay.
And just to get away from all the tech plays in here, that's going to be my short of the day. I think Ulta is going to continue to go lower.
Look at this. Okay, so Ulta, you don't have earnings until August 22nd, so you're good there, right? You can see on the daily chart, way below all the SMAs here. Look at this here, the 1OP and the LRSI, both of them way down here. The volume, good. All around, look at the M5. Yeah, and here you have your sell signal right here. So here, if you're day trading this, right, you get the sell signal here. Sell, 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 sell till you hit this. Cash out, you made a nice profit. Now it's a buy signal. Now, if I'm day trading this, I probably don't use the buy signal. It's a weak day. It's a weak stock. That just kind of tells me get out of my short, right? So I wait. There it is again. Sell signal again right here. And now I'm in profit again. So if I just today decided, you know what, I'm not going to trade that much today. I'm just going to look at a stock like Ulta and follow these buy sell signals. Okay. Short, out. Wait, short, wait for a buy signal to get out. That simple. I mean, I have to say these signals here are some of the best I've if not the best buy signals I've seen. And they're quite, they couldn't get any easier to use. Short, get out of the short. Short, wait. It doesn't get any simpler than that unless you want it to do it for you. So I really like those. Great job on putting those together, Pete.
Thanks. Yeah, I love them too. It's been years in process, and I've had to basically rip everything apart in what makes 1OP work and put it together in different manners and test it. And I'm really, really happy. I'm excited for these signals to come out, to be quite honest with you. And there's so many different ways to use them. We should have a release probably in the next 2 or 3 weeks. We're adding servers right now. There's an incredible amount of number crunching that has to take place for all of this. And so we're adding those new servers to handle that. And when we have that, we're going to release the new version. And it's, I have a couple of different versions of this signal, and one is 10p signal and one is 10p2 signal. Harry likes the latter. I like the former. So I'm not sure what we do, but a lot of the divergences that we used to see in the 10p indicator, I've been able to eliminate those. So it's made a huge difference.
All righty here. Got some questions now. Let's take a look here. A lot of questions. Kind of a personal question. Feel free not to answer. What mindset aspect of trading do you find yourself struggling with the most? Questions directed at both of us. No matter how much you trade and no matter, how much you make and how consistent you are, you could be, at the top of your game. There's always a emotional gut response, and your goal as a trader is to kind of make it as devoid of emotion as possible. You want emotion. The more emotion plays into your decision, the worse that decision is going to be. But it is impossible to rid yourself. And there are all different kinds of emotions, like I have a bit of a gambler in me. Well, that is sort of a kind of a thrill-seeking emotion. You have that fear emotion when you see something going against you, like I saw Boeing going against me the other day. That kind of trigger. We'll get out now while there's still something in that option. And trying to divorce myself from how much of this decision is an emotional decision and how much of it is based on just what I'm seeing in front of me, based on the numbers, based on the trends, based on the charts. And then it really becomes, and the most difficult part of that becomes making sure one doesn't bleed into the other, because you can start making decisions and convince yourself that this is a decision based on logic or a decision based on whatever. But what it really is you're just trying to justify whatever emotion you have. And you see that all the time, particularly with the gambling instant, right? Where people are looking, I'm going to go and get a bunch of out of the money puts on Nvidia right now, or out of the money puts on SMCI or whatever it is. And, you can look at it and try to justify it based on the charts, but you have to be careful that what you're not trying to do is really just trying to put lipstick on that pig and say, oh, look, this was a logical decision, but really you're just trying to justify your emotional gut call to begin with, which is always dangerous. You, Pete, what's one of your bigger mindset struggles?
Well, mine is not trading, when the setups just aren't there, especially having a chat room and providing daily market commentary. I feel compelled to always put something out there like this is a good trade and this is a good trade. So I'm having to force myself to do that, and not trading is a really nice place to be. And I've learned how to cope with that over the years to where I just trim way, way back, and I stay very passive. But then when I start getting a setup like I see coming in the next probably 2 weeks or so, man, am I hungry. And man, am I ready to trade. And I am ready to trade some size, because I know the probability is setting up for me. And I absolutely vary my size. I feel that I need to. And I can probably, over the years, I know now that there are probably 3 or 4 periods throughout the course of the year, and each one of these periods might span 2 weeks or so. If I add those up, and I know this is contrary to what a lot of you might hear, I might make 60%, maybe 2/3 of my money during those very short periods of time during the year. And when they come, I don't hesitate. I fire. So, kind of learning when to lay back and when not to trade has been one of the more difficult things for me to learn.
I mean, certainly, as a trader, you want to trade, right? I mean, it's kind of like if your job is to play poker and you go into a poker room and you're watching everyone play and you're sitting there and you're waiting, right? But you know, just if you're not, if you don't have your setup, if you don't have, you know, trading is difficult enough as it is, and it certainly is difficult. So if you don't see the conditions you want, they'll come eventually. I mean, it's not like, oh, if I don't get it now, there'll be no market tomorrow. The market's been there, will always be there, and will be there a year, 10 years, 100 years from now, probably. So you're going to get your moment. It's just a matter of patience. So
Yep,
it doesn't matter how you get, sorry, Pete.
I was just going to say that if you take a look at the M5 charts for SPY on the last 2 days, Monday and Tuesday,
Right there.
you're going to see these long green candles and long red candles, and they go both ways. And the net change for the day is 0. And so when you're in there forcing trades and going through periods like this, you lose money. And there's no worse feeling than taking a look at that flippant chart and going, why in the hell did I trade this crap? There was nothing there for me. And then you realize that if I had that money that I just pissed away, it's going to take me a long time to recover those crappy losses in a go nowhere market. And now when the market's really setting up for a decent move, I wish I had that capital to trade, but I don't because I pissed it all away. So knowing when not to trade is critically important.
Kenny Rogers song kind of comes to mind. Someone asked here, Pete, are the sell signals to buy sell on the web app as well, or just on the desktop?
Only on the desktop for now. I have not decided if we want to put them in option stalker, but I'm leaning yes.
Okay. Does it matter how you scale the charts? Like with the gap down from yesterday on SPY, you have that on your chart. It'll make today look really flat. If you have the D1 stretch vertically, nothing is going to make the D1 look flat here. So here, look, here's the D1 on SPY, right? You can zoom in here all you want, but one, I like to see all the SMAs on my chart. 1, 2, 3, and that's the 50, 100, and 200 SMAs. Those are the three that I want to see on my chart at all times. 2, I want to be able to be far enough out that I can see if there are any significant trend lines that I need to be aware of. So, for example, on SPY, there is, let's see here. Let me see if I can find what trend line I would be most interested in. Probably starting on 5-3 here. So let me go to 5-3. Okay, here I am. Oh, you know, let's see here. And if I go down here to this, and I'm going to cut up right through here, and you can see this is the trend line I'd be most interested in. And here it tries to break it, but this is a temporary break. It finishes above, so that still connects. Here, 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 and you see today it gaps below that trend line right down. So the next area I'm interested in on SPY really is that 50 SMA at 541.62. And we're $3 away from that. That tells me that we might get a test. Nah, maybe not today. It's a decent way away from hitting that number. But at some point this week, perhaps earnings dependent, depending on how the rest of the earnings come in this week, we might see a test of that 50 SMA. I believe in order for SPY to get any kind of bounce here, for the market to bounce, we're going to see that 50 SMA tested. When will it happen? Probably this week, but it's going to be very rare to see any type of bounce without that type of support being tested on the market. So, but yeah, that's how I like to scale out my charts. I always put the log on as well. So, but that's generally the distance out. I like, make sure you see your SMAs and make sure you're far enough out that you can draw appropriate trend lines. I mean, obviously you can go out pretty far here and start drawing trend lines, you know, a year out, 2 years out. But really what I'm looking for here is did it break through any significant trend line recently? And it has right here. And that is it. So
Yep. And very important point now that you got the chart up is that first blood has been drawn. If you look at that
yes.
chart, you can see heavy selling pressure. What does that mean to us if we are in day trading mode? Which scenario suits us best? If you get a gap up, oh boy, is that going to be a good setup, because you're going to wait for that resistance. And as soon as you see it, you're going to know that they're going to want to test the bid. And the market, when it's in bearish mode, it will tend to open near its high of the day, and it will tend to close near its low of the day. And when you see that gap up start to falter, especially if you see a couple of long red candles on the open that take out the low and get into the gap, man, you got to be ready. You have to be all over those shorts, knowing that you are going to hammer them as soon as you see that type of price action. And how will we know, and when might we possibly see a short-term bounce in here? Well, a gap down is more likely to find eventual support. You don't buy until you see a higher low double bottom, but then you're looking for those long bullish hammers off of the low and nice stacked green candles to tell you that there is some support starting to form. But typically, you're not going to see the market find support after a round of selling like this until you test that bid and until you find that concrete support. Because buyers, asset managers who might be interested in nibbling in here, they're going to be waiting for that support, and you need them to want to start buying aggressively before you have any kind of little bounce in here.
So look at the importance of this trend line here, by the way. So AMD, we mentioned the trend line, right? And then I got the alert, it was broken. Now you don't want to jump in right when the alert is broken, because you want to see, is this going to confirm? Is it going to hold? Look what happens here. AMD breaks below, you can see the little wick here, and goes right back above that trend line. So now if you were short AMD and you see this happening, look at that, there it is. That represents the trend line bounce. That tells you whether it's programmatic or whether it is, you know, manual on traders at institutional level, they are looking at this line. This line is meaningful. And that there is a confirmation that this line is meaningful. So now you really want to hesitate on your short for this, because you want to see this line get meaningfully broken and then continuing on down. So on a day trading front, there's, for me, nothing to do on AMD until I see this meaningfully broken down and confirmed below that line. But that just shows the importance of these lines, and it can help you with your trading if you know how to draw them correctly, because these are really institutions and high-level retail traders are following these price points as to where they're going to buy and sell. And there is an example with AMD that you got kind of in real time here.
I love it when you guys hold our feet to the fire. How long am I going to hang on to AA? I don't have any swing exposure right now. I sold the puts with the intent of buying the stock at 38.75. I am long the stock at 38.75. I whiffed. I made a mistake. I thought I was selling the option that expired before earnings, and I sold the expiration date after earnings, and the stock continued to pull back into the earnings announcement. It's a commodity stock. I'm not worried about the price of aluminum. I'm confident that AA is going to come back. If it were a tech stock, I would be much more concerned about managing my downside risk. So AA also tends to have decent option implied volatilities. Stock gets back to the 100-day moving average, which I'm sure it probably will in the next 3 weeks or so. I will look to sell some out of the money calls, probably the $38 strike price, give myself some protection. Eventually the stock will get called away from me.
I don't know, to touch on
AEHR.
something with selling puts. Usually, I mean, yeah, people went in on the wrong expiry, but you sell a put because you want to own the stock. It's as simple as that, right? If I looking at and I go, oh wow, I want to own Amazon, right? And so I've been accumulating Amazon. Let's say I want to own Amazon. One way to do it is obviously I can just buy the shares, right? Okay, I'm buying Amazon shares now. Another way to do it is say, okay, well, would I be happy owning Amazon at 179? Okay, well then I'll just sell the 180 puts for $1.20. And if they don't get triggered, great. I made $1.20 in premium, but that wasn't my goal. My goal is if it does get triggered, I now own Amazon at a price point of 178.80. And I'm happy with that. Now, it might drop, it might not drop, but this kind of then goes into more of a long-term play. There's a reason I want to own the stock at that price point. I have some fundamental or macroeconomic global reason for thinking that that is a good price point to own the stock. You know, you can make the case right now. All right, Nvidia is pulling back, but you know what? I think, you know, based on everything I've read, everything I know, this is not a day trading or swing trading, but more of a fundamental trading. I think Nvidia is going to be over 200 by the end of the year, whatever it is. So I want to own the stock. Well, all right, I'll just sell the 116 puts for this week, or I can sell the 114 puts for this expiring Friday for $1.20. I'll now own that stock if it gets triggered at 112.80. Am I happy owning it at 112.80? If I am, then I don't mind owning the stock. I'm willing to now accept a dip and a back and forth because I have a longer term view on that stock. That's why I sold the put. If you sell puts just to try to collect money on the premium and you have no other thesis on that stock, you're going to find yourself getting burned because now you're going to find yourself owning a stock that you didn't want to own. You just wanted the premium. And chances are you wanted the premium because market makers had high IV on it and then you had high premium. And that means you own now the stock that you didn't want to own and it's volatile. Now you're fucked, right? So don't do it for the premium. If you're going to sell puts, and a lot of times you see that I sell puts and I get assigned the puts and I hold them. This happened on SMCI, it happened Moderna and Nvidia, all that. And yeah, I take a little bit of downside with it for a while. Every single time I've wound up in profit on those trades because I had a longer term view on the stocks itself and was happy owning it at the price I got it at from selling the puts. I was not selling the puts just to collect the premium.
Same type of question on AEHR. That is a long that I have for August, starter position. I'm long some calls in August, but stock has pulled back. I like the way that it's holding up right now. Yes, it's below the 200-day moving average, but it still has strength relative to the overall market, and it
Which
definitely has.
stock?
It's AEHR. Is a
AEHR. Got it.
Yep, it is a semiconductor equipment manufacturer, and it's got decent option implied volatilities in it. You can see relative to the tech sector how well that stock is holding up. I probably am going to be adding to the position if it gets back above the 200-day moving average. This is one that I might sell some out of the money puts on using maybe the $15 strike price and continue to add to the position. They had a really good number. They traded a PE, I think, of like 13 or 14. So relative to where some of the other tech stocks are trading, I think the value is pretty compelling here. So yeah, I like the gap up post earnings. So it's another one where, yeah, if I'm looking and the market starts really pulling back in August and the stock is still holding up well, you know, I'll look to start adding to a longer term position based on the price action.
Someone asked here, I've got a lot of, I'll try to get to all these questions, but what fundamentals, if any, do you take into consideration when taking a longer swing trade or, you know, sort of a investment type trade? Well, I hate fundamental analysis. I can't stand it. And the reason I can't, you take 10 analysts and each one of them will tell you a different indicator that they think is the holy grail. You got some, old school, PE ratio and PEG ratio. That's what you want to focus on, or free cash flow. There's the ticket. And I get all those reports, right? So I get fed from JPM these detailed reports and then their price points on it. So one thing I do like to look at is the delta, the difference between what is the average price target, right? And Tip Ranks is a great service that gives you this, but they'll average all the analysts together and say, okay, so the average price target for Amazon is 240. I mean, that basically they're thinking this is where the stock will be at the end of the year, or they'll give the time frame, whatever, a year's time, whatever, and compare that to the current price. So how much of a difference is there between the two? So, one example that, if you look at Meta, for example, the average price point on Meta from an analyst point of view is around 479. So you can see it's at 467. So there's not much of a difference between what every institution out there is saying this stock, where the stock will be in a year, compared to where the current price is. So there's not much upside, right? So one thing I'll look at is upside. Another thing I'll look at is the sector itself, right? So if I'm looking at the tech sector and then maybe the semi-sector industry, where is this stock? If you look at, like, Nvidia is a leader. If you're talking semis, Nvidia is top of the food chain, right? Okay. So what I'm really looking at is, where do I think this sector is going to be? Because it's going to be very hard pressed to think this sector is going to go up, but Nvidia won't, right? Or the sector is going to drop and Nvidia is going to be the only one going up. It's kind of is the sector. So I'm going to look to see global socioeconomic factors. And now you're talking about political considerations of Taiwan and China, and you're talking about the sort of saturation of the market. You're talking about future, not just current product, but future, is Nvidia going to start going into quantum computing, etc. That you're sort of looking at all these other factors. So those are kind of more what I look at when taking a stock. Is the sector going to hold up over the next year? Is the analyst average price point that much higher than the current price point? I look at those things more than I'll look at a PE ratio, a PEG ratio, or book to earnings, on any of that. So that's kind of my my focus on those. Do you have any other fundamentals that you like, particularly, Pete, in terms of anything you look at?
Well, there are times when there are themes that kind of run in and out of favor, like the consumer discretionary theme that I've already talked about today. So yeah, those will influence me. When I'm starting to look at searches and scans, I can see stocks that belong to certain groups, be it bullish or bearish. And then, yes, I'm going to do a little bit of reading to find out what's driving that particular price action. We're not anywhere near this right now, okay? But when push comes to shove, you go through a 2008 type of market environment, the fundamentals that I lean on is I take current assets and I subtract total liabilities. Total liabilities. If there's anything left over, that company has cash. Cash is flexibility. I don't care about anything else. If it's a going concern, a viable business, that company has cash. Those are the types of companies I'm going to be selling puts on, which incidentally, Aehr has no debt. I love that. That's great, So, and they're not needing cash. They're not needing to raise money by doing a secondary share offering. So that's good. So those are, but again, that's push comes to shove. You can throw everything else out the window in terms of great prospects and new product lines and pipelines and all that. If you've got cash, you've got money to buy back your shares if you think they're cheap. And that's good for the stock too.
What is my thinking at the time buying PLTR call options? Well, at the time, PLTR was one of the stronger stocks out there. You take a look at PLTR here. Obviously today, like anything else, but when I took this stock, it was right around up here. It was up around here. And well above all the SMAs, well above upward trend here. You had a nice bull flag falling. It broke through its compression here on this bull flag. So you had every reason to be bullish on this stock. And then obviously now you have the pullback. I have a couple more days on this option. I'm hoping that I get a little bit of recovery in it. But it's when I took it, it certainly clicked all the boxes. Do we deal in OTCs? No, we do not deal in OTCs. So let me tell you why. We deal in two things. One, how is the stock performing compared to the market? And by the market, SPY is the proxy. Is it overperforming or underperforming? Why do we do this? Why do we care whether or not a stock is over or underperforming, right? So for example, the market is down today. And is there a stock that's down proportionally more than the market, right? So the stock should be down because the market will drag it down. It's an ETF. All these stocks are in the ETF. Even if it's not in the SPY ETF, it's sort of like a gravitational pull dragging these stocks down. Why do we do that? Because we care what institutions are doing, and that gives us the biggest indication of what institutions are doing, because institutions are the only ones that have the liquidity to make a stock over or underperform what the market is doing. And institutions follow certain technicals. And so we look at those technicals and try to see, all right, we can see what institutions are doing based on relative strength, relative weakness. We can look at our daily chart and our M5 chart on the technicals to try to make a guess as to where these stocks might be going. And you cannot do that with OTC. OTC is not going to relate to a centralized dependent like SPY here. There's no gravitational pull on it. And also, you're not going to be able to get any type of indications on institutional involvement there. So that is why we stay away from the OTCs. Not saying there's not money to be made there. However, I've yet to see someone put forward a consistently profitable method of making money there. What we put forward here, whether you're looking in the chat room, whether you're just watching these weekly, however you want to do it, is showing a consistently profitable method that day in, day out, week in, week out, month in, month out, you're going to see profit by following this method and by following and by doing these type of trades. Show me that with OTC or something else, I'll take a look at it. But I have yet to see in many years and many people showing different things that level of consistency. And how do you prove that out? You need someone who's posting their trades, posting the entry of the trade, the position size of the trade, and the price of the trade. That needs to be able to be confirmed through time and sales. Any broker will show you time and sales. Someone say they bought 50 contracts, you can see, did someone just buy 50 contracts at that price? And then they need to show their exits and their price of their exits. And that is the only way. Everything else can be photoshopped. Everything else can be edited bullshit. You need to see those trades. And that way you can see, is someone actually consistently profitable or not profitable?
Okay, there's a question. Hey, Qualcomm is bouncing. When should I stop this thing out?
Oh no, Qualcomm's bouncing. Fuck. Oh God, I'm getting out of here. That's it. It's over. Bye.
Okay, if you look at the D1 chart of Qualcomm,
no,
you can see
late, burn it.
How choppy it is.
Close it.
So you can see this stock and most stocks retrace. It'll make a move higher, and then it'll pull back and retrace maybe half of that move, and then it'll make another move higher. So it's a very jerky, chunky kind of stock, but it has a nice technical breakdown. You did not need to short the low of the day. I certainly would not have shorted the low of the day, given that the S&P 500 is currently starting to find a support level. You've got a bullish 1OP cross on SPY. You've got mixed overlapping candles and a marginal new low. No, this is not where you'd want to short today. Come on, man. What you'd want to do is you'd want to wait for the market to bounce, see what it does up around VWAP. This is in all likelihood going to be a bearish trend day. When it gets rejected off of VWAP, the SPY that is, then you're going to be waiting to see what Qualcomm does. How high did it bounce? How far did it go? Is it staying below VWAP? If the answer is yes, and the bounce is small and brief, then you know that there's still some more downside on Qualcomm to trade it. So
I got to say, some of you fuckers are stock stalkers. Seriously, you're the equivalent of someone who's like, I texted her 10 minutes ago. She hasn't texted. Oh my God, she read the text. It says read. Why isn't she responding? I don't understand. All right, I'm going to text again. I'm going to text again. Hold on. Hey, just making sure you got my text. Everything okay? Getting worried about you? Question mark, question mark. Yeah, that's what you are. That's what you're doing when you see these 5-minute bars bouncing up and not looking at the bigger picture, the daily chart. Is the stock still bearish? All that. No, 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 no. You are a stock stalker and you need to get over it or else they will leave you. So just relax, take a breath. There is a reason that there are technical levels there. Watch the technical levels. And unless those technical levels get violated, take a chill pill and kick back. Don't worry about it.
And so when you see this type of SPY price action and you were short during the course of the day and you had some really nice gains, lock them in. You start seeing these mixed overlapping candles and a compression near the low of the day. This is not where you want to be entering short positions. This is where you want to be taking your gains and observing what happens on this probable market bounce. You want to see stocks that can barely get off the deck. Wham, wham, wham. The sellers are still there. They're persistent. The stock stays near its low of the day, no lift. All right, you know that you're going to get a bounce in here somewhere. And as I've mentioned in the chat room last Wednesday, in fact, when we had another bearish trend day, I said, listen, if you miss this whole entire move, and let's say you're a futures trader, you miss this whole move down, not to worry, because you're going to get a test of that VWAP. And when you start seeing signs of resistance around VWAP or even slightly above it, because there are going to be people wanting to buy, especially if you get a move above VWAP. It's like, I knew this thing was going to bounce. Bye, 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 bye. You know that once that resistance starts to show itself and that bounce starts to stall, you will have an excellent entry point for a short. The low of the day will be tested. As I sit here right now, I can tell you there's going to be a bounce. And I can tell you that once more in the next 3 hours, we are going to test the low. And that's what gives you confidence to short on that bounce, is the knowledge that the low of the day will be tested. Are we going to take it out? That I don't know. But I know we're going to bounce, and I know that that's going to present an excellent opportunity for us to reload on shorts.
You know, people don't understand what a time spread is.
And once more, I get a question on AA and what's my thesis. Here's my thesis behind AA. I'm not worried about the stock. I feel the stock is going to bounce, whether it's in a month or 2 months or 3 months. And in the time that it takes it to bounce, I'm going to make a shitload of money on the shorts that I take. So I'm not going to worry about it. It'll more than offset the loss of one trade, one stock that I don't mind holding for the next month or 2 or 3, as long as it takes. That's my thesis. Yes, we do have losing trades, okay? Yes, in some instances, we'll hang on to those trades longer than what our normal trade duration would be. But that means that we've got to shift a little bit and be comfortable owning the stock on a longer term basis. And I fucked up, okay? I sold the wrong expiration. I stuck with the trade longer than I should have. That's going to happen too. But the premise of the trade in Alcoa and aluminum, the company is going to be fine. It's not going to go out of business. I'm not worried about it going to $3.
I fat fingered a trade the other week where I wanted to close it, and I actually doubled the damn position on Thinkorswim. It happens. So, you know, I wouldn't. These things have the idea behind the trade still was sound. And by the way, anyone who doesn't show losses is full of absolute shit. You know, chances are they got their Lambo in the background and all that. And you're not seeing that they're in their mom's basement. And, you know, do yourself a favor. Do not take incel trading advice from people who claim they have this 100% success rate. no one has 100% success rate. You want your success rate to be above 75%, and you want to spend your time learning how to trade, that 2 years, 3 years that it takes to do that. First with paper trading, and then trading just one share, getting yourself to that win rate. And don't worry about your profit factor. Don't worry about first getting the right setups and getting that win rate right. Then you start looking at your profit factor and all that. But that's why you're spending all this time building it up, journaling, and making sure you have it almost like muscle memory. Because one of the things that keeps us in trades, if let's say it turns against you, or you're wondering, should I get out, is because you can look back and say, okay, I know this setup has an 80% win rate. I know this setup has a 90% win, whatever it is, right? So you take a bullish put spreads, and if you set it up correctly, you're going to have like a 92, 93% win rate on a bullish put spread. You can lean on those stats. You can have faith in those stats, particularly if they're built up over hundreds and hundreds and thousands of trades, that this is going to be your kind of margin there. So without that, it's very difficult to have that level of faith in a trade that you're making when you don't have all of that history there. And then history comes from journaling, and history comes from paper trading for the first year or two, trading with one share, not risking too much, but learning the process and seeing each setup and labeling those setups. Each setup, market is down, today, you can call it extremely bearish. Taking a short on a heavily, relatively weak stock with a weak D1 on an extremely bearish day has a what percent win rate, right? Then when you have that, you're not so worried about these little bounces and all that, because you're looking at the overall bigger picture.
If somebody came in and said, hey, I think AA looks like a good short, it does look like a good short. And normally I would pivot out of that position and I would short it. But for whatever reason this time around, I decided I'm just going to hang on to it. It started to leak against me. I'm not worried about it. So I'm going to hang on to that position. Incidentally, I did just
You're a better man than I am, Pete. I would just be like, your mom looks like a good short too.
Yeah. I did just get out of LMT. I hit my target. I'll post the trade in the chat room. That's the only one I've done today. I liked it a lot yesterday, and when I saw the strength this morning, I didn't hesitate to buy it because it looked like it just wanted to go higher.
All right. Well, so you have my pick, which is the Qualcomm short. You have Pete's pick, which was the
Ulta. I'm going to go
Ulta
with
short. You have two shorts there, by the way. On both of these, a put debit spread is also a very good option, particularly on an expensive stock like Ulta. If you were to short something like Ulta, you could do a put debit spread. If you wanted to do it short term, you could look at the 365, 360 put debit spread there. You can get that for $1.50. So you're risking $1.50 for $3.50 upside, which is a pretty good deal. You're getting almost a 2-to-1 on that put debit spread, particularly given the amount Ulta moves. It's a really good deal, actually. In fact, I might take that one myself. But don't forget, when you're looking at some of these and they have really expensive options, or like Ulta, you have very wide bid-ask spreads, like the 375s on Ulta, which is sort of the puts I would take. You're looking at a 880 bid, 1080 bid-ask spread there. So it's you might want to look at a put debit spread for something like that.
Yep. And in terms of overall market, this is going to be a bearish trend day. Look for a market bounce somewhere around VWAP. Look for resistance. Once you hit that resistance, expect to see the low of the day challenged. How would I handle trading over the course of the next week or so? Mega cap tech earnings next week still. FOMC statement next week. You want to still stick with day trading in here. We've got some blood in the water. So yeah, you might be able to try an overnight short or two, just like the Ulta put debit spread that here he's just mentioning. I'd still keep it to just overnights, keep it very short term, and then let's see how that plays out over the course of the next 2 weeks. If we get that lower high double top and we're heading into seasonal weakness in August, then I would feel much more comfortable taking longer term bearish swing trades, but not until then. I need that confirmation of resistance.
Okay. And you still have that nice sell signal here on Ulta right here. And let me take a look here, Qualcomm. Okay, Qualcomm's actually on a buy signal. So I'm going to watch that closely and see how that goes. I don't want to see Qualcomm breaking VWAP, right? So, I'm also going to be watching VWAP, intraday VWAP, regular. I'm going to watch that for the remainder of the day and see. I don't want to see Qualcomm closing above VWAP, obviously. But a lot of that's going to be market dependent. So we shall see.
All right, everyone. Thanks so much for attending and watching. We'll be back on track here. So we will do another live event a week from today, and I'll be doing my Sunday video. For those of you who like these live events, please tell other traders who are trying to find their way.